Hello once again, Maverick traders. It's market roundup time. Joe with you here. It's the 9th of April. It's a Wednesday. Yeah, we're in the middle of the week. You guys know how this works. Once again, folks, it is summit time. I just want to make sure that you guys are aware of the 26th, the 27th, the end of this month. It's going to be a lot of fun. If you haven't registered yet, do so. We've got a lot of fun stuff to talk about, including AI. And based on some of the markets lately, AI would be pretty helpful. We'll see. First up, I'm going to go through the meaningful news of the day. We're going to take a look at things technically, and if I've got some trades to share, you guys know I'll do it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, folks, boy, did we have a different day than we've seen for quite some time. That's fine. We were looking for that bounce, and it looks like we did get it. Let's just go straight into the daily news. Massive reaction today in the markets, fueled by political action. Once again, we knew that was going to happen. We knew it was inevitable. The Trump administration pauses tariffs on 75 countries and increases tariffs on China, saying that, hey, we've got some people coming to the table trying to make a deal. Today seemed to be the day that they are going to kind of reduce some of the tariffs. I think it's just a flat 10% across the majority of those countries that are willing to negotiate. But I think China's tariff went up to 125%. It was met with a pretty interesting move to the upside. So on the outside of that, now the 10-year note auction was met with some strong demand. We saw the yields on the 10-year actually go below 3.8% over the weekend, and they started climbing and just shot up rapidly. Now this was before the announcement. So it's been a very interesting day on many different levels. So check it out. Dow 7.87%, the S&P almost 9.5%, almost 10%. And the Qs, I think, posting their largest move in history, up 12.16%. You can check me on that, folks, but it was one of the largest, I know that. The Russell's up 8.5%, oil up, gold up. So it wasn't just the equity markets. I believe it was just a big surge across everything, and it could just be speculation, as there really isn't a lot of rhyme or reason here. Let's take a look at the advanced decline line. 88% advancing, 10% declining, but 89% of the stock still below their 50-day moving average. So yes, a very impressive, strong bounce, but that's what we were looking for. Let's just jump straight into the charts here. So when I want to see an oversold bounce in a bear market or a bear move, I want to see this. I want to see this type of volume, and I want to see this kind of movement. Corey has always said the largest bull move you'll ever see is going to be in a bear market, and that's exactly what we got. Is this the bottom? I don't know. I don't care. I'm not buying it. There is a resistance level this came up to, and this is just one day. Now, folks, this is a reaction to a political change, and what you're seeing here is anybody that took a bearish approach or a bullish approach or wanted to buy on the news or wanted to sell on the news did so. This is a combination of a massive short covering, and it's a combination of a massive surge to buy, and it's still speculative. But we can follow price action, and that's what we do, trade the markets in front of us. So it was a good move to the upside. I like to see it. Can I call it capitulation? Ooh, maybe. The VIX did drop quite a bit. I do like that it kind of hesitated at this resistance level. If you take a look at any other chart, you're going to see the same thing here. So let me just move over to the Qs. Here's the Qs. Big push to the upside. Now the volume wasn't as large as what I would expect it to be. It wasn't as much as the S&P, but it's still a good push to the upside, decent volume, and it seemed to kind of stall itself out below a resistance level with a descending moving average. Now, yeah, could this be the bottom of all bottoms? Sure. I'll tell you if it is or not in about 2 months. But right now, based on what we've seen over the last few days when it comes to speculation, reaction, volatility, fear, greed, there really is no rhyme or reason. So let's see if there was any outliers, if this was just a general bounce. It was a very large bounce. Microsoft up 10%, NVIDIA up 18.7%, Apple 15.33%. That was the largest move to the upside Apple has ever had in a day. I thought that was pretty interesting. Isn't it interesting? It was an oversold bounce. Amazon up, Google, everything's bouncing to the upside. It's great. Now, if you take a look at the charts, they're still a little wonky and kind of hard to get into. So for you guys who've been sitting on the sideline like I have, let's just continue to enjoy what we're seeing here. Now, what am I going to do here? Well, we're below the 20, below the 50. The 20-50 slope is still down. Everything's still looking bearish. I moved it from a -3 to a -2 because we might see a little bit more of a move and maybe some consolidation up at this area. That's why I put the weekly to 0. I am not looking to buy the bottom. I'm not looking to say, hey, this is where I'm going to put all of my money to work here to the bull side. It is kind of the capitulation that I wanted to see. We'll see how well that plays out over the next couple of days, which could establish a pretty good pivot or a pretty good bounce. So it's neat to see that we actually have that first reactionary bounce. We'll see how far it goes, and we'll indeed see kind of where these markets go. Now, guys, I know that yesterday I didn't give you any trades. I'll tell you what I'm looking at. These are things that are on my watch list, but they're really not behaving the way that I'd like them to. So Newmont Mining, steel, gold you could have up there. Sorry, folks, those are just the two that I have. But if you look at anything in the industrial area, it seems to be doing okay. Down on the bottom, it's all over the board. I mean, I've got Merck. Below that is Campbell's. I've got Adobe. I've got Moderna, General Mills, Siri. I mean, I'm all over the place. These things that are staying bearish continue to stay bearish. The problem that I have is every time that I look for confirmation, they give me these indirectional candles that just go all over the place that kind of wipe them out. Now, the patterns overall are still okay. I just have to be a little bit more patient and let them roll back over. If you are going to trade these markets to the bear or the bull side, you got to make sure that you have the confirmation in the overall pattern. This could take 1 or 2 days. Also, your trades have to be a lot wider or more forgiving, meaning maybe smaller position size. So unless you can swing a bat that hard, best just to sit out. All right, well, let's take a look at one of these. This is steel. I like it. It had a pretty good bounce a few days before what we saw in the markets, and I think it was the reactionary move to that last push to the downside. So, very still reactionary, but it's still moving higher. I do like the trend. If you guys are just going to play pure price action, that's completely fine. It's stabilized up here. It might have a move to the upside. Notice it didn't participate with the bounce because it's an outperformer. Now on the bear side, folks, I imagine you saw that I have a whole lot of bear trades, but they've had substantial bounces against me, which is what to be expected with this type of volatility. So when you throw them on, make sure you give them a wide berth and allow for its move. So this is Moderna. I do like this one. I like how it broke down a little bit, but take a look at the bounce today. I mean, if you can't give it flexibility up to this point, I'm sorry, folks, that line's a little bent up here. I'll try that again. If you can't give it flexibility back up to at least where it gapped, you might not survive this. This is a bullish engulfing candle. Yep, sure, which means I expect 1 or 2 days up. We'll see where this bounce goes in the market. It was a pretty good reaction to the upside, a massive dash to short covering, a massive speculation buy, and it did create a lot more volume. This is what I kind of expected yesterday, but we really didn't get. It kind of fizzled out. So a little bit of a political push or posturing. Once again, the majority of bounces do need a stimulant behind it, and it looks like we got that. So this is kind of where I'm at. Nothing that I really want to jump into right now, but I figured, hey, I didn't share anything with you guys yesterday. I figured I'd at least give you some of my watch list today. So big reaction in the markets fueled by political action. Surge impacts more than just equities. It's more of a reaction to what could be because we still don't know where these tariffs are going to go. We don't know if China's going to come to the table. We don't know anything. It was just a reaction. So I'm still seeing a lot of posturing. I'm still seeing a lot of bias trading. So we'll see how long this lasts. So technically there's no change to the overall trend with today's action. Big surge up, huge, right? Record breaking in some states, or excuse me, in some areas, but it is still at a resistance level. So if we can just quiet it, don't anticipate, stick with your technical analysis, wait for confirmation, we will see it. There's a lot of shorts out there. Short covering could really push this higher. There's a lot of speculative traders out there that want to put money back in this market, and that's going to go as far as it's going to go. Once everybody's happy, meaning all the people that want to be out are out and everybody who wants to be in is in, we can start to see where the markets go. I think it's going to help moving into earnings season. It'll be interesting to see reactions when it comes to some of the numbers that we see in some of these companies, along with, like I say, this is down the road, how these tariffs indeed impact our economy and how often they get flip-flopped and changed and negotiated. So we got a while. We do have jobless claims and the CPI and the PPI number. So we really need to see how Powell, more importantly, how the Fed reacts to that and what they do moving forward. Earnings season, once again, it's starting. I think it kicks off, I think next week. There's a couple out in the next day or so, but I think Friday is where it really starts to kick off. So just be aware of that and make sure you double check your trades. However, it'll be interesting to see how earnings steer these sectors because I don't think the tariff impact is really going to show itself for quite some time. But overall, we should focus on the current strength of some of these sectors and companies as they are now. All right, exciting day, a tumultuous day. Hopefully you guys didn't do too much on it. Just sit back and watch. You can learn a lot from these markets without putting money into it. So sit back, take notes, and become smart. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everybody.